Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad, Fitra, Nanda, Dava, Vandana. In this occasion, I would like to present about the Morgan Stanley case of credit risk management company. So in this subject, I choose the nature of the credit risk management, and I took the one of the biggest corporation in the United States. So the as a Morgan Stanley Corporation. So basically, in my presentation, I'm gonna talk about the company profile and the risk management of the company itself of Morgan Stanley. And for the Morgan Stanley itself, is a global financial service firm headquartered in New York City. So it's stated in the New York City, serving a diversified group of corporation, government, financial institution, and individual. So the Morgan Stanley actually had several distinction in the group of corporation. They also work for the government and the financial institutions such as insurance and others as well. So the Morgan Stanley operates in 36 countries around the world with over 600 office and workforce of over 60,000 of people. So here's the map of the global office in the Morgan Stanley. So you can take a look in the map over around 42 countries that had Morgan Stanley Corporation. And for the industry itself, so the Morgan Stanley company operates in three business segments. So the first one in the institutional securities, and then the second is the global wealth management group, and the third is the asset management. So here is the several aspect of the Morgan Stanley Corporation in the field of the international institutional securities. There are such investment banking and other like sales, trading, financing, and marketing activities and other activities as well. And in the field of the Morgan Stanley with Barney, it is like a corporation. So there are clients and other product and services. And in the field of the asset management, so the Morgan Stanley had global asset management product and services such as in the equity, fixed income, and alternative. And for the risk management of the Morgan Stanley itself, the first one about the management philosophy of the Morgan Stanley. So the management believe that effective risk management is a vital to the success of the company's business activities. And the execution of risk adjusts return through the prudent risk taking that protects the company's capital base and franchise. So this is the philosophy of the Morgan Stanley Corporation. So they believe that the management is a vital success of the company's business activities. And here is the five key principles of the Morgan Stanley to mitigate or to reduce the credit risk. The first one, so about the comprehensiveness, and then the independence, the accountability, define risk tolerance, and transparency. So here is the five key principle to mitigate or to reduce the credit to reduce the how the credit risks happen. And for the credit risk itself in the Morgan Stanley, such as the corporate lending, it can be a relationship driven, such as the expand business relationship, and then others is the event driven, like a lending commitment for events such as acquisition and merger by the client because it is a big company. Of course, for the corporation, they need to acquisition or merger to other company as well. And others credit risk as well is a securitized product, so it's like structuring, underwriting, and trading collateralized securities. And for the risk, borrower not performing according to the agreement and devaluation of collateral. So it is become one of the credit risks that happen in the company when the risk borrower not performing according to the agreement and devaluation of collateral. And about the derivative contract, so it represents the future commitment to swap interest, payment streams, exchange currency, or purchase or sell commodities and other financial instruments on specific terms at specific future dates. So it is about the derivative contract, and for the derivative instrument are used for trading, foreign currency exposure management, asset and liability management. And for the risk is managed on a company-wide basis, worldwide trading division level, and individual product basis. So it is the kind of the derivative contract in the Morgan Stanley business activity. So how they manage the risks, and then how the instrument work for the in the field of the derivative contract. And other credit risks that happen in the Morgan Stanley's business activity, such as commercial lending and margin lending and consumer lending. So for the credit risk management, so here is the how the Morgan Stanley's corporation mitigate or work for the risk management. So for the risk management, so the Morgan Stanley had a department for the risk management, namely the credit risk management department, and they built their own framework. So for the framework itself, the credit such as a credit limits, also the credit portfolio and the single name exposure. So for the credit portfolio, so the it is limited only to 250 limits, and for the credit portfolio itself, it is a multiple limit frameworks managed to firm and by legal entity. And for the credit portfolio, it is had to be assigned at a single product level, and it aggregate across product. And it also to manage by credit professional and by government or communities. And for the credit risk of the management in the Morgan Stanley, so credit risk management is responsible for evaluating, monitoring, and controlling credit risk for each business agree segment. So because the Morgan Stanley has a huge business segments, for the credit risk itself had to be evaluate, monitor, and control to become more better and to mitigate the risk. And for the credit risk management activity, it has to be ensured that there are also a transparency of material credit risks, the compliance with the established limit, approving material extension of credit, and communicating with senior management regarding risk concern. So for the credit risk itself, it has to be like a link with others department as well, link with other management as well, to make sure that the credit risk can be mitigated to be mitigate better than before. So it is the concept of the Morgan Stanley itself with communicating with the senior manager regarding the risk concern. And for the risk mitigation of the Morgan Stanley, they develop some of the way to make sure that they can mitigate the credit risk itself. The first one is about the truck management of key risks of our elements such as size, financial covenant, and collateral, and other as well like sell, assign, or sub-participate funded loan to other financial institution. And the last is about the enter-master netting agreement and collateral arrangement with the counterparties to offset obligation, request collateral, and liquidate collateral. So because Morgan Stanley, it is like a huge company, huge corporation, so they prefer to do some of the activity or some of the mitigation to make sure that the management can handle the risks. Yeah, for the example, like the financial covenant or collateral. So they also sell or assign the sub-participant funded loan or other financial institution. And because it is important for the big company like Morgan Stanley to make sure that they can mitigate the risks. Okay, maybe that's all for me about the how the big company, the big corporation like Morgan Stanley, yeah, mitigate their own risks, because we know that the Morgan Stanley itself had several distinction of the segment and the business development. So they are also had several ways to mitigate their own risks. So that's all for me. Hopefully, you can understand my presentation, and we can discuss further about any kind of related topic. Okay, so the last I say, wassalamualaikum warahmatullahi wabarakatuh.